Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, March 7th, 2024. It's 12:28 p.m. as I'm starting the video, and here's how I'm going to cover. We're going to do a very brief overview, start out with an overview of the equity markets, just going to reiterate what I've been saying there and the levels to watch, including those market-leading stocks in the sectors in the S&P. Again, I'll breeze through that because I've covered that in extreme detail recently. And then I wanted to do an update on some of the recently highlighted trade ideas and things that I'm watching as well, whether they're actual trade ideas or if I provide analysis on something, you can decide whether you want to trade it or not, whether I call it a trade idea or it's something I'm watching, something bullish, bearish. But again, some of these I watch more for at this point in time cues on what impacts they might have on the market, such as namely Treasury and on that and in crude oil, Treasury bond prices or interest rates in crude oil. That is. I'm going to also cover. Somebody asked me yesterday for an update. I think it was yesterday in wheat on a chart. I posted a chart. I want to share that for you because that's going to also dovetail into. Recently, I did highlight and recommend or suggest DBC, broad-based commodity ETF, as a trade idea. Still like that as both a kind of a just a position, a longer term swing trend trade, way to be diversified asset allocation. I'll do an update on CARA. I don't know if anybody's still in IEP. I never pulled it off as an official trade because we hit some of the early targets and I still had other targets there and it's still in play. I even highlighted the last objective pullback and it's still good from there. Re-entry, that is. What else? We'll get to Treasury bonds. It sounds like a lot, but let's just I'm not going to beat a dead horse here with the indexes, the most important things, more so than even the indexes, but I do have those levels. It's the yellow lines, bears repeating. 435 on QQQ, on SPY, you've got a 50280 right there. And then on all the MAG, what I formerly known as MAG 7, whatever you want to call them, big tech stocks, Microsoft 397. Worth noting, however, we are back testing. Remember, we broke. This is a trend line off the September lows on Microsoft, the yellow trend line, which was a key level. We broke it, and we're currently back testing, so that's worth noting. My expectation would be a rejection there. And again, price alerts set on all of these. And once we get those, then we'll have the next and what I refer to as higher probability sell signals. Just to reiterate, we came into the year short right off the peak back in the end of December. We had a sell signal, got us in with near impunity off the highs. That was the biggest pullback. And then we covered those shorts that clearly posted targets being hit and going long bounce. So then fast forward, we had a couple sell signals recently based on the 60-minute charts, but all along before, during, and after, it was very clear they were just fractional, really, scaling positions. That was number one. Number two, on the break of the yellow trend line, came with a grain of salt because it was before NVIDIA earnings. We've been back testing, and so it was a three-part scale, and now the third, and really all in. Like I said, can't go full position or aggressive until we get the final sell signals. And I've since kind of tweaked those or added some more. And again, it's not any one level; it's collectively the majority of the top sectors, especially the top four sectors of the S&P 500, as well as those MAG 7 stocks that I'm going through right now. And then that'll be our swing, short, trend sell signal. Till then, and I'm going to do this in this video towards the end, if you're interested, active trading, that's where, most of my money for the year is made, and in and out, little micro trades, 1-2% here and there on the indexes, and I'll get to that at the very end of the video, but I want to push that back because I know most people out there are just typical swing and trend traders and investors, and that doesn't really apply to them. Okay, back to the levels. Microsoft 397, okay, noted back test. And look, just technically speaking, if Microsoft powers on through there and makes a solid close back above the trend line, then that's bullish. It's net bullish, and it'll probably open the door for Microsoft to make another marginal new high. Still be, if it happens anytime soon, the only guarantee I can give you will be still a bigger divergent high. We've been diverging for a while, and the indicators are lagging to the point where any new high anytime soon is guaranteed to be another divergent high. Now, I always say divergences aren't sell signals. What are sell signals? Breaks of support, or you have an objective short entry on a rally back into resistance like we do right here, right now. But again, just like I said with Apple or anything else, the odds of any of these big tech stocks playing out is relatively low until we get the kind of that all-in moment sell signal I'm talking about. So if collectively Microsoft takes out 397, Apple's already triggered. We already have a check mark there. 180 was my yellow line, but that's only one of the 7, and we have 0 of the sectors that I need to see break in the S&P 500. However, this is big. This has a huge psychological and mathematical impact on the markets. Big funds. When something I want to note here on a weekly chart. This is a chart I've shared many times in the past, but not recently. I've had for a long time an uptrend line coming off the 2003 lows. That was a period at Apple ended a bear market. It was an 82% drop off that divergent high. We traded flat back to that level. You can see for a couple years, Apple tried to rally, kept coming back to that same price level. Split adjusted, again, I use log arithmetic charts, and it's showing you split adjusted, it's 25 cents. But then, boom, it started a very clean uptrend with multiple reactions since. There, and that broke. So I hadn't mentioned this recently, but I've been sticking with, longer term. These charts are, telling me the same thing quite some time. I just wanted to mention that it is a weekly chart, but we already closed below it last week. We had a weekly close below, and this week, barring some crazy, insane reversal that puts us in close proximity back, near or on or above the trend line, that's going to be a confirmed sell signal. But again, you go to the daily chart, we're at big support. My purple levels in the last time we were down there last year, I posted Apple as a long trade and market as everything because it was hitting. These are key supports. So just wanted to point that out. Spend a little more time talking on Apple because you need, it's one check mark. Now we need a few more, and it's an important check mark. I put much bigger weighting on Apple than I do Meta or anything else. Right now, all eyes are on NVIDIA, but this is worth noting again. And it's probably not going to go much lower until some of the others break down. I'll tell you that right now. So the RR at this point is just not good. It's at support basically. Just like yesterday, there were only two trades to be made on the indexes. No trade at all, really, which is not trade, or go long because we were at the trendline support levels. NVIDIA still well above 742. Amazon still above 165.74. Alphabet above. Really, I didn't have a yellow line, but I have these purple, and I have mentioned it's testing these 200-day moving averages and still, on them right above it right now. So we need to clearly see those taken out on a daily, even better weekly closing basis. So far, that's not the case. And again, I didn't have a yellow level for you just because that chart wasn't as clear. I think the 200 is the most important thing right now in close proximity as far as technical levels on Alphabet. Meta 454.43 and the intersecting key yellow uptrend line. So that's it. It's the same story. And this is already well off its highs. I don't have a yellow level, but just gave you that trend line the other day and we broke it and came back down to that support level. So that is it in a nutshell. I'm going to tell you right now that, remember, we had a divergent low here and I threw it out as a trade idea for those interested in going long with a breakout above the bullish falling wedge. It was a trade. We still have another divergent low. It's just simply an extension of that previous divergence. So I will say the same thing I said a couple weeks ago. This, along with Apple, are two of the better looking. Well, Apple, again, long-term trendline break. No, I'm stick clear of that. It looks a little toxic. No, but hey, it's at support. It's always objective to go long at support or wait for a break of support to short. Tesla's at support again with a divergent low. So I would much rather buy Tesla right now than say Meta, which is not at support and has negative divergence. So there's that. So again, I don't have any yellow lines on it. It's already broken down. So two of the formerly Mag 7 stocks are given sell signals, and then not to do them all. But these sectors of the S&P, let me load SPY. SPY also, just kind of cutting in and through that, trading through the uptrend line. So I'm have been putting a higher weight recently on the sectors. And those are, again, if you want to keep it simple, because I know I throw a lot of levels out, XLK Tech. Again, yesterday, the only trade to be made, if you were going to make one, was to buy. As I say, even though this looks like a breakdown appears likely and imminent, support is support until unless broken. So that's it. They bought support yet again. They've been buying the support level every other time since that other than the pre-NVIDIA earning whipsaw, and that's it. So there's no change. There's the yellow trend line on XLV I've had. We've been closing right on or slightly on or above it, or a hair below it the other day. This is what I just added today, called a BOD, benefit of the doubt trend line. Why did I add that? Well, we had 2 spikes through it recently. I actually need to bring it up a little tighter. And so if you want to give it the benefit of the doubt, but we're still not below that level. So that's it. So 1, 2, 3, third largest XLF, riding it like a champ on the trend, right on it right now. I have 2 potential setup. I have a lot, actually. I could go through. I'll just tell you real quick. Visa looks to be breaking down here, but again, if I want to give it the benefit of the doubt, I go here. But we're still below that trend line. This is the trend line I had, and this is a big level here, 272. So I would wait for MasterCard to join suit and take out this trend line. That's, again, the trend line off. You got it, the October lows, big trend line to me. And again, they're all just sitting right on these trend lines. And I last week told you my expectation. It's probably this week we'll see the indexes and the max, the big tech stocks take out those levels. We only have 1 day to do it. It's still possible. And if not now, it'll probably be early next week. Again, we're just right on those. And it's these divergences and the waning momentum and everything else. It says we'll probably break them out. But let me say this for the 100th time, because I look at some of these comments. No sell signal. When you're at support, the only trade to be made is to buy. If you're going to make a trade, you buy support or you wait for a break of it, and we don't have a break of it yet. So I just wanted to say on Visa and MasterCard, they're both looking ready for a nice drop, but you'd want to see, because those are birds of a feather, obviously, Visa and MasterCard, you want to see MasterCard break. So there's your level. And then the biggest, leader of them all, JP Morgan, bearish engulfing candlestick so far today, engulfing that previous candle. I had a trend line here. It got violated briefly there, but it's been doing a pretty good job. So that trend line should do the trick right there. And I could go through them all, but I'm not. I just went a little off track because we were on XLF, because that's the 3rd largest sector, and that's also still above my yellow trend line. And then last, these are the 4 I'm really, again, keep it simple. XLY, consumer discretionary, right on the line right now. So, and we close again. If you have to squint, give it the benefit of the doubt. That's it. And then, what I'm going to do, guys? I'm gonna cover the other trade ideas I told you about: UNG, USO, DBC, update on wheat, CARA, IEP. I'm going to get to treasuries, SMCI, but I'm gonna change gears here because it's about to happen, I think. So I was gonna, at the end of the video, for active traders, and I'm going to give you the setup now. So this is, and I cover this. I've been covering it more lately than usual. And like I said, I get a few almost angry comments. Why this is not a day trading site, not an active trading site. But then I get enough saying, hey, I like those, Randy, I took them. Ignore it. If this is not in your wheelhouse, if you don't have the time, skill sets, inclination, or whatever to active trade, then just ignore this analysis. I skip forward to it now because we're at the level I wanted to see to put on a short today. That's right here. It's about 496. I have it at 445. Got several reactions there. This is a 5-minute chart. So anytime I'm talking about the 5-minute chart, if you're a long-term swing trader, trend trader, investor, ignore it. Fast forward the video. You'll see when I get off these. Just watch time frames. You can see are up here in the upper left. But that's it. And this is it, guys. It's simple stuff. Divergent high. Obviously, divergence isn't always a sell signal, but a lot of times rally into resistance with divergence I'll take. Then on a break of a trend line. So it's divergent high, divergent low, divergent high, drop, divergent low, rally, divergent high, drop, divergent low, rally. This was just a trend line break, no divergence, but a very clean up trend line, and drop, divergent low at good support. This is the one I posted day before yesterday, 20 minutes before the close, when somebody asked me if I was going long off I think they said 435 or 6. This was the level I liked here, that gap. It was the big bottom, the top of this gap, and it had a divergent low. I didn't milk all of it, but I got enough of it, and that's it. So I sit and wait for the next one, and that's it right here. Resistance, and any new high, if we pop a little bit above there, will be even better on the longer term time frame. I'm going to get to that in 1 second. So let me just jump. These are the time frames I typically like for active trading: 5, 15 minutes, sometimes a 1 minute chart, quite often the 1 minute chart, but I'm not going to go over every single one, but I do look at the multiple time frames. So here's a 15-minute chart. And again, I can scroll back a little further. And again, simple stuff, right? So there was a little bearish rising wedge with a trend, a break, sell signal, and a drop, and you say, yeah, it's not much, but yeah, I talked about it the other day. Each contract of NQ again, or whatever you're trading, QQQ, that was a 1.7% drop. I don't have to tell you, if you're an active trader or even a day trader, how profitable that, if you can just sit here and pick off a couple 1% moves a few times a week, do that 4 weeks in the month, 52 weeks in the year, or close to it. It's what active trading is about. All right, so, and you can see, so that was a divergent high, sell signal, and then you had a bigger divergent high, another breakdown. I'm just trying to show you the ebb and flow. This is how the market moves. There's a divergent high, there's a break of a minor trend line, a little drop, trade drop, another one. And again, where the targets would be are based on 5-minute charts, 1 minute charts, other things you look for: divergence, divergent high, drop, divergent low, rally, divergent high, drop, divergent low, rally, divergent high, drop, divergent low, rally. And now, so what I've wanted to get to here, this is a 15-minute chart. So this is where I like to, and it's again, not necessarily a day trade, more of a trade that I will take home today or add to if we get up here, because if we can just pop, we're just slightly below that previous high. I put a yellow line here. It's kind of dimmed down. That means it's not in effect yet or in play yet, but I can see it if it comes into play. Let me get rid of that box there, excuse me. Then, so if we can pop it, pop a lot of some stops, punch up on up here. And if it happens anytime soon, as long as it doesn't go too high and then take out these divergences, we'll have even bigger negative divergence on this 15-minute chart. So this is kind of a scale in, if you will, zone with a stop somewhat above and relative to the target, where to, at least right there. But again, the trend has been, you get these divergent highs and lows, and they're usually good for a couple percentage points. There's 3% on that last drop, 3% on the pop. This one was, at least to that little, that would have been a target right there, the reaction high. So let's just say you sold right there, 4%. All right, you get the picture. And then, of course, 60-minute chart, much more significant for swing trading. Still divergent high, still below the trend line, back testing, negative divergence, been building for a while. We had, as far as, I speak to, the swing trade, which I still consider to be in play. We came into, again, short into the year, which was right here. We had that sell signal there. We posted covering that short, reversing it there at the lows for the reasons stated at the time, not including but not limited to this little bullish falling wedge pattern and positive divergence there, 60-minute. And the most recent, and I still consider an active short trade, but not a full position trade, just a scale in. We had sell signal 1 there, sell signal 2 on that breakdown. Gives you an average cost right there. If if you took, and you would be at most a 2/3 position, fractional position, maybe half a position, and we're only 3% above that right now. We'll go a little higher, maybe 3.5 or so, and then. Again, now the only difference back then is I've added more of those yellow lines, which will be now the full short position if we get it. But unless we do, and again, that's talking one account, long-term accounts, swing accounts, active trading accounts. We're going to get back to that right now and just look at NQs real quick. NQs, let's just do it the same way in reverse, 5-minute chart. This is a 5-minute chart, same premise. You get these divergent highs, drop. You can see the divergence lines: divergent high, drop, divergent low, bullish falling wedge, breakout, rally, divergent high, drop, divergent low, rally. And so far right here, you can see clear negative divergence. And I have, it's hard for you to see in the video, but I have 2 trend lines really on the futures. I have the trend line off that recent low. It's probably the one it is the one most important. And I have this little minor uptrend line, which we just broke. So that one, well, before I started the video, I was going to tell you break of that one, take us down to that one, but that already happened. So now the bigger sell signal will come at a break of that one. So that's why I wanted to jump forward, because I don't want this video, by the time I get it uploaded and out to you guys, this may or may not have already happened. So we'll see. Next one is 15-minute time frame. Like I was showing you on QQQ again. See the positive divergence. Nice clean trend line break. Shoots up. There was a little break right there. We had divergence starting to build. We got a correction. We went up, made a marginal new high. Not enough to stop out a trade, if you were shorting. And that was actually posted back a few days ago. I believe that was the same as a QQQ fade trade. I gave you 2 targets and they were hit. And that was that. So that was very much yeah, it was, because we back tested on the 5-minute QQQ chart. That one I did give you. Maybe it was in the, can't remember if it was a homepage post or under the comment section of one. And we hit that, and you can see it ended with your little positive divergence, went up, had a little small bearish rising wedge, good for a quick 1% or so pullback. Big support zone right here. It hit that level, bounce up here, put in a divergent high, drop, put in a divergent low at support, as mentioned. I think this was the other day. Can't remember, right before the market closed, the one I posted in the comment section, or was it here? I don't know. Again, I take thousands of trades a year. Divergent high, drop, little, you can see them here, little divergent low off support, 17,920. And there's that uptrend line, and there's the resistance zone. And as I said, very open to possibility of any new high, because that would then be just on the bigger time frames a divergent high, a larger divergent high, in which case would typically the bigger the divergence, typically the bigger the ensuing trend reversal. So that would set the stage for a bigger drop. Short-term targets right here. At least that we get, I'm targeting right now at least a pullback to here, even if we don't put in a new marginal new high. That's what I think will happen. Now, here's a takeaway, guys. Sometimes, and believe me, I'm telling you from decades of experience, I used to sometimes find myself getting lost in the world of what I call the intraday charts, doing active trading, sometimes day trading, and then kind of lose sight of the big picture. So this is all just kind of a real quick, short-term stuff. If you want to game those little 1-2% rallies, put whatever your number is. Everybody's number is different. It's going to put, if you're trading QQQ or especially futures, whether it's the MNQ mini futures or the regular futures. If you're trading the regular NQs, as I've said even one contract's putting several thousands of dollars in your pocket for every 1% you make. Just 1%. It's going to put up what's like $3,500, $3,600. And so again, everyone's number is different. It may or may not be worth it to you. And of course, for me and some others, is a huge tax benefit for trading futures over shares, the way that they're taxed. All right, let me cover now the other things. So back to what I wanted to cover with you. I already got okay, and that's where I was kind of segueing to again on the, if you're trading actively, keep an eye, and the easiest way to keep an eye on it is just price alerts. That's what I have, on all those sectors and the yellow lines that I said. So, if I'm just immersed in active trading and I'm not paying attention, which I usually am anyways, because I'm working from home in my office all day long doing this, I will get those price alerts. And like I said, one, maybe not a big deal, but if they start going off like popcorn on the same day or within the same day, then I know I need to move quick with multiple sell signals. Especially in the longer term, or swing trend trading accounts. Okay, other trade I did. Let me just, in no particular order, I just have things scratched down on my notepad. Do an update on UNG. Remember, we hit T2. We did it with negative divergence. We pulled back, and we're at that uptrend line, which all along, remember, this was first highlighted as a setup back here. Futures broke out, got us in early. As I mentioned, if you don't trade futures, you're subject to gaps, and natural gas is almost going to gap almost every day because it's such a volatile instrument. In the futures are trading around the clock with liquidity and moving, so it's going to gap up and down. The best you can do is set your OCO orders. One cancels another, but that was a good resistance level. And look, pulled back. So one of two things: A, we're at support. It's a trend line I last couple times I said you can buy pullbacks to it. You can also use set a stop below. You can also set a stop below T1, the first target. That's price support. And then I still maintain T3 for now, but I expect, pullback was expected up. Let me give you futures real quick. Okay, so again, you have a little bit, there's the uptrend line right there in the futures. There's the divergent high. That was that target zone right there that was hit. Here's that minor trend line right there. It was taken out. And so this is where the buyers should step in. Again, you have these divergences. They're worth noting, but as I pointed out, and I don't have the chart queued up, longer term, we're coming off some low levels. The longer term chart seems constructive. So if you're willing to ride out the zigs and zags or tactically trade like I do, by reversing or covering, selling, buying pullbacks to support, selling rallies into resistance, then there might be a lot more upside on this one. And right now I'm still maintaining this target zone in that T3 I showed you on nat gas, but again, our UNG nat gas ETF or ETN. But again, a break under there could open the door for a lot more selling. Could be the end of the rally. So don't fall in love with it. Like if you fall in love with natural gas, she's gonna burn you one of these days. So just be disciplined when trading it, and that's all you can do is take the levels, and objective entries, place objective stops, and then you're going to get a runner trade. We're already from the breakout. This one's already put, it's been about a 20% gainer so far. There was a breakout. That was a setup on the break above there. It's just measuring 20, it was about 21% actually to the recent highs. Okay, crude, more of a, hey, keep an eye on this one because it's going to be the bane of Powell if it continues higher. Handcuffing just how easy he can get. Still holding that $74 level. Still has the divergences. So again, I'm kind of, let's say, cautiously bullish would be the best way to describe it, but more so watching this to see what impact it might have on the inflation and where the future path of rates go. And that's it. So we're still above there. The buyers have been battling out at this area, and if they can clearly put that in the rearview mirror and run up to the next level, especially if they take out the divergences, market's not going to like, because that'll restoke fears of inflation coming back and being sticky. Just want to show it to you here on futures as well. This is it's a nice resistance zone on the futures that you have. There was support there. It popped into a couple times, and that's really the top of it is by far my most important number, about 80.25, and on that we're just below. So if this should do the trick. I think of crude, because a lot of people watch and trade the futures. That's usually my preferred trading proxy. Remember, we did have a divergent high. I'm going to probably add another trend line here. See if that one comes in and fits. Pretty good. This is your more significant, more important uptrend line down here. Price support there, coming above. So if these divergences do play out, they reject it here. We're probably going to come back down here. Maybe that intersecting uptrend line might come into play as well around the same time. But this should be kind of like that yellow zone on IEF. That's the yellow zone for crude, where I think you'll start to see the market take note, and people talk about price of crude and what it's going to do to inflation and how it's going to hamper Powell's plan to return back to his easy money self. Okay, a couple weeks ago I threw out DBC. I like that. Here's a long off this support level, 21.77. Nice support. Previous reaction here. This is a broad-based, very diversified, about as diversified as you can get ETF that holds a basket of commodities. It's got them all. It's got energy, crude, nat gas, precious metals, industrial metals, agricultural commodities, and so forth. It's not running away or anything like that, but it still offers an objective long entry. It offered one here, as I mentioned a couple weeks ago, on on or off the above the 2177 support, but not too far below. Maybe a little punch through to shake out some longs, so give it a little room on the stop, especially if you're swing or trend trading. Stops are always relative, or should be, to your price target. If you think, like I do, there's a chance we could see another leg up in a bull market, and what I believe to be a new bull market in commodities that started in 2020, right around the time the market's bottom of COVID and commodities bottom. Charts indicate that, then you can give it a wider stop, but not too wide. Even if you think you're going up here, again, tactically or strategically, a stop should be somewhat below there. That's the next support. So if it takes out that, and it's anything but a whipsaw, if it takes out 2177, probably going to take us down here to the next support, about 1952. And again, bigger picture, it doesn't really foil anything. You look at a long-term chart, this is what I'm talking about. This was our end of the last bull market in commodities right there. We went down, we had a bear market that ended with this big old divergent low back when the stock market bottomed, when COVID hit. And so far, this just looks like, by all metrics, higher highs and so far higher lows. That's the making of a new uptrend or bull market. So that's what I'm talking about, kind of longer term picture. Must have been months back. I must have highlighted this potential bull flag for you. Impulsive leg up, bull flag continuation pattern. Although, you know what, I'm going to take that away now. Why am I doing that? Because the nature of a bull flag, if you break out, which we did, should continue with an impulsive move that matches or mirrors sort of the move up. However, that doesn't take away the fact that everything I said on the daily chart. Positive divergence at support. We since broke above the trend line. There's your second objective entry or add-on. Next first target 2260, and then also an objective add-on or re-entry if you took profits there if we break above it. And I will most likely be adding additional targets. I'll even throw one in now. I can just see right around there. But either way, I don't want to spend too much time on it. And the takeaway too is remember, please remember this, because I talk about it very often. It is, this what happened is, this is Powell being dismissive of inflation, finally recognizing it late in the game, starting to hike. This is the market cheering. What you were seeing where the market is off the October lows was this abatement in both commodity prices and interest rates. And so that, cheered, victory, declared by the Fed. And so if you start to see this, especially you get anywhere near and take out those previous highs right here, that's where you're going to hear renewed concerns about how inflation is sticky and the battle has not been won. And it's a catch-22, because the easier Powell gets with monetary policy and the more stimulative Washington gets, and we know this administration, my God, we've never had such stimulative fiscal stimulus pushed through in an expansionary, non-recessionary environment. This is like this will go down in the history books. So, they're going to keep doing that. We know that. And it's just a matter of how much and when will it matter, and when will the ballooning federal debt matter. But either way, guys, this is a trade idea. Take it or leave it. There's your parameters, stops, everything else, and it's a way to diversify, if nothing else. CARA, do an update there. It's not playing out as quick as I thought, but it's still playing out, and still no reason to sell this one for me. We entered to buy a breakout, was on a break above 83, went up. I said there would be, probably a hiccup around the $1 level, and there certainly was. It's a key level from my experience. When stocks lose it for the first time, they trade under there for a while. If they're there too long, they get a delisting notice from the exchange, and so they do their damnedest to get it up. And just because of that, it's typically bullish once a stock recovers $1, not on an intraday, but a solid move above. So trying again, and again, say what you want. There's a great example of technical analysis. It's been bouncing in the range, the 83 breakout and the $1 resistance. So if we can take that out, it should go on to hit any or all of our targets. Like any trade, don't get married to it, because if it wants to backtest the trend line, if it takes out that 83 level, which has been, remember, it was resistance initially. That's why I put it there as the breakout point. Resistance, once broken, becomes support. Now, if you break 83, guess what your next support is? Going to be a back test of the trend line. Problem with trend lines, downtrend lines, they come in lower and lower every day. So I won't want to ride out. That's where I think a stop should be, not too far below 83, in my opinion. And let's go on to the next one. IEP, haven't heard much on this. Threw it out there, but again, it didn't hit the final target, and it never went below entry, so it's kind of still there. And I think it'll probably go on unless the market rolls over pretty hard before then. I think there's a good chance because this was our entry point on a breakout above 1890, and we hit T2 for a quick. I expected a reaction then. It was a good resistance level. It was a quick 20% pop, pulled back, and I highlighted again as an objective re-entry there, as long as it remains above that level, the recent lows. And so, again, if you're in it and I don't cover it much, or any of the trade ideas, just bump me in the comments section if you want an update on it or anything else. The bearish engulfing, as I mentioned the other day, got taken out, so technically that really doesn't come into play as a thing anymore. But you have, still this one's stalling out. It's just really having a hard time. It's lost momentum, and you can see these are why they call these momentum indicator. Look how steep that divergence is. That's something's going up. That's very strong negative divergence, meaning the stock is just pretty much stalled out. It was following NVIDIA. And so what I've given you, I gave you this the other day. This is still, to me, I shorted. This is one I put away in my swing trading account. I told you I was just going to do a sole price target, keep it very simple. And it's still very, very much, depending on my entry, if anyone took it that day, right at the top, virtually flat, slightly underwater, well within any reasonable stop based on that downside target, big divergence. And two things need to happen. It needs to break this trend line, obviously, a little bearish rising wedge, and they got to put the fork in the knife or fork or knife in NVIDIA's back, most likely, not necessarily, but most likely. And so, and when's that going to happen? Well, when those sell signals come. I told you on the indexes and the majority of market leading things. I promised you NVIDIA, it's been narrowing, fewer and fewer stocks, pulling this market to new highs. And so when those big leaders die, Apple already died. Sure, it can rally from here, but I gave you levels to watch. If it starts to recover that long-term uptrend line, if it starts to get back above, with the 200-day moving averages, things like that, hey, something else is going on. As of now, Apple is dead, but that's only one of 7 we need to die. Well, Tesla dies, shouldn't take that. But of the big ones, Tesla doesn't even matter anymore. And then those key sectors in the S&P 500. All right, let's see what else I have. Oh, yeah. Oh, I was covering DBC, and then somebody yesterday, I think it was, asked me about wheat. And sure, I'll give you, because remember, it's obviously commodity. So I posted this chart. This one, this is over 20-year price history here. And I've covered, these are all annotations from the past I've had. And last we had longs. I've highlighted in the past objective longs off this key uptrend line right here. This is a secular bull market uptrend line in wheat. This goes back over time. Obviously, wheat tends to get more expensive, not less expensive. There's more and more less and less arable land as forests and the areas are taken down for developments. Anyways, and there's more and more mouths to feed on earth, and so over time, it only makes sense. Commodity prices are going to go higher. But wheat's a very trendy thing, kind of like natural gas. And again, all these were highlighted back at the time. I'll point out this parabolic uptrend line, boom, bullish falling wedge. So these have been trend trades. And this was a Russian invasion of Ukraine did that, put in a divergent high, and wheat's been pulling back since. Now, that was then, this is now. Here's the this is now. So my reply was, hey, I don't know if we'll get there, but if we do, and I drew out on that chart that I posted, it was in one of the recent comment sections. If we get there and we get there soon, we're going to have this positive divergence we had in place. It's still in place right now. You can see, I can just take this trend line I have to draw. I have to go into edit mode on this chart. I can't annotate in real time like in the other charting platform. But there it is. So if we can get down there, great. We may not get all the way there. We already have positive divergence, but I don't see any hard signs of a reversal yet. I'm probably going to, let me do it now. Let me add that. Okay, all right, I paused it, put it in edit mode, marked the chart up, and you can see what I did. By the way, this is an end of day chart. This does not reflect what wheat's doing today. They update this every evening, so it's going to show yesterday's close. That we currently do have positive divergence right there. But again, wheat's been divergent. Not on this. This is, by the way, guys, this is a weekly. Quite often on WAT, I've been showing you daily. This is a long-term, bigger picture thing. So I added a nice, clean downtrend line that gives us a bullish falling wedge, very near key uptrend line support. So while we may or may not get there, if we do and we have positive divergence, that is a great buy point in my opinion. It's around $500 as wheat future. You can watch wheat futures, ZW, if you have a futures account, or if you don't have a futures account, simply go to investing.com. They give you free real-time quotes on futures. Type in wheat futures, and if you see it get around 500, then you can buy WAT. This is going to be a more accurate gauge of wheat prices, but wheat does a decent job. The WEAT, that is the ETN. And so, and that wouldn't be this would be a trend trade. And then your next objective entry would be on a breakout above the downtrend line. And then we'd be looking for one of these, or one of these. This is the last, or one of these, even if it's just this. We hit the trend line. We had a nice tradable double-digit rally and then pulled back again at a higher point. So if you was an investor or a trend trader, if you went long on that one, then you never went underwater. You just had another back test. You could have added to your position and you would have got all that, assuming you were in it. So there's your update on wheat. And again, maybe it's too much. Randy, I don't futures. I don't have time to do all that. DBC is a one-size-fits-all, but then you're going to have things in there like cocoa, which has gone parabolic, and that's not going to end well. You can see here I haven't added the parabolic trend line. I could. This is a parabolic run, and those runs usually don't end well. So yeah, and I've read up on. There's some fundamental. There's support right there. So this kind of chart reminds me of like SMCI. It's where you have that support there, and that's probably once that's parabolic. I can add this charting platform is nice because it does let you put in parabolic trend lines, but that's what that would be. And then that's probably the drop we're going to get when it finally plays out. But there's no sell signals. Okay, what was my point? Well, if you do DBC, you're buying this right now at these prices, and that may continue. Parabolic runs, and don't ever underestimate how far they can go. But usually, again, when they end, it's usually not just a mild correction or steady wave back down. It's usually a pretty hard crash coming after it. So the point is, that's why I like to be more selective in trading commodities, because wheat has nothing to do with cocoa. They're grown in different parts of the world in different growing conditions, and so they have different supply and demand dynamics. Alrighty, I think that's it. Or at least let's just make it it. All right, we'll end it here. Like I said, active traders, you have QQQ at resistance. I wish I had a better uptrend line, but I did show you some on the futures that were there. And then again, I can see the potential, just a relatively small amount of upside to put in that marginal new high, which would just make for a better case here on the 15-minute chart. Because I love me some divergent highs and divergent lows, and we're a little bit below that previous high to give a full tech. But again, sometimes you get what I call, I make a lot of stuff up here, but I call them ADL or ADH, almost divergent high, meaning for all intents and purposes, prices are at the same level while the indicators are lagging behind. And then if you want to even get more precise, look at bearish PPO crossovers usually trigger the reversal. So you put up a PPO histogram and you'd see that we're about to make a crossover there. On the 5-minute chart, we already have one there. All right, I got to wrap up or I'll never get anything done today. This has been Randy Finney with Right Side of the Chart. Have a great day.